15th of June, 2023, Thursday, MAO with Cal once again. Wow, even the Bank of America experts are torn apart, okay, between the bulls and the bears. Now, the thing is this, we all know that Michael Harnett and his team, they are still bearish. But apparently now the equity analysts in Bank America are turning bullish. They believe that the bears are dead. All right, this is going to be very interesting. So watch on, guys. All right, disclaimer applies as usual. And thank you, Ames, for the kind sponsorship. Now, first of all, this coming Saturday, 2 days from now, more than 40 people have already expressed their interest to attend this coming Saturday Gold Outlook. And of course, something interesting will happen towards the end. I really want you guys to come on board. So quickly now, find this particular article, put your comment there, I am attending, so that you will be, the name will be a lucky draw, and the winner may take home $50 minimum. In fact, we may go to 100. All right. So one lucky winner. So quickly do that round. Now, will the market peak between 13th to 15th of June? Someone been asking me, and I believe that yesterday MAO, the previous day MAO, I've been telling you guys this, that the Dow Jones and the bond market is really diverting, all right? And usually when this happens itself, either one of them will basically draw towards the other. So the thing is that, in my opinion, I believe that, right, the Dow Jones could be traveling downwards to 31,800 area if, let's say, the divergence had to close up. And the thing is this, I wrote there that if the market is to peak, then it'll be between 13th to the 15th of June. Now, of course, again, what's my reason? I shared in some of the MAOs because of seasonal pattern, because of a following of what happened in 2008 and 2009, there is a tracking over there. So I believe that this could actually happen. But of course, once again, more important thing now is that the Federal Reserve have decided to pause interest rate. Yes, indeed. Yeah, but they say that there will be 2 more coming later this year, and that is something that stunned the market. So let us watch this breaking news from last night's CNBC.
Steve.
The Federal Reserve pausing, but raising the median forecast of the funds rate to 5.6%, indicating a very hawkish committee outlook and strong support for at least 2 more rate hikes this year. I think this comes under the definition of a hawkish pause, maybe a very hawkish pause. FOMC statement saying it's holding the target rate steady, allowing it to assess additional information, including the cumulative effects of tightening and lags of monetary policy. I want to go through in detail here the summary of economic projections and the funds rate. Only 2 members of the committee are forecasting the rate at the current rate of 5.13%. 4 support 1 more hike. 9, or half of the committee, is forecasting 2 more hikes, but there's more because 2 are supporting 3 hikes and 1 supports a full percentage point higher or 4 quarter-point hikes in the funds rate. The committee sees more inflation this year than it previously did, forecasting a 3.9% core rate versus 3.6 in the prior economic projections in March, and less unemployment, 4.1 versus 4.5. And moving on, they did.
Well, you heard yourself, right? Oh my God. Not, in fact, itself, there are some committee members that are looking at basically 3 rate hike and 4 rate hike. Oh my God. Okay. That's very hawkish. So you can watch the whole video later on the Trader Boys on Facebook page. But more important, this is going to rock the market. But did the market go down? Nope, not exactly. So the thing is this right now, after Germany, we know that now New Zealand is entering the technical recession. All right. Now, technical recession means that the 2 consecutive quarter of this negative growth. So basically now New Zealand is down, and you can see that down to 0.1, previously was down by 0.7. So if, let's say, Germany, New Zealand are down, what do you think will happen next, guys? This is just a matter of time. So we can see right now the numbers are really showing that there's no growth for New Zealand since 2021 until now. There was some intermittent growth, but at the end of the day, it's still at a negative zone. So this is the same thing what happened for Germany, who entered a technical recession in early 2023. So apparently now Italy and Spain are all very near to the 0 marker. So just a bit of time, we can see a global recession by September. And there's a reason why I said this, there could be a pullback by August, September, because of all this thing going on. All right. But again, don't quote me, because now the thing is that they are looking at maybe by 2025, the CPI inflation could go back to 2% again. I'm going to leave it there, because the only way for the inflation to go down back to 2% is there must be a very strong pullback in the asset class. That means stock market must come down, property price must come down, and that will bring down inflation. But at the moment now, seemingly difficult. Now let's discuss what happened last night. Well, the Dow is down at 232 points. That's where I told you guys there'll be some selling. but the NASDAQ continued to go up to 15,000. Now, of course, people have been asking why the NASDAQ is so strong. Well, there's nothing to buy anymore. Seriously, if there's going to be 2 more rate hikes, definitely the consumer products, the conventional the conventional stuff will be going down. But then again, the money must do some, must work with the money, right? So that's why we believe that the AI will become the next thing. That's why, again, yesterday, the NVIDIA, you have AMD all moving up again. Even Intel went up by 4.92%. So it's very clear that they're all congregating at the AI project. But that is going to be a killer because it's at all bubbles. When everyone go crazy, oh gosh. Now, one thing that caught my attention was this one here by United Health, all right, group, down by 6.4%. Now, before you freak out, this is because there was a dividend announcement. But the thing is this, for this particular counter, right, this is the heaviest weighted stock in Dow Jones. And I got this feeling that this may be a sign that you have to be very careful. So S&P 500 closed flat, all right, you can see down up by 3.56 points after the Federal Reserve leave interest rate unchanged. So the main thing is because they feel that they are making progress in the fighting of inflation, but indicated there'll be 2 more rate hikes. Okay, very important thing is that it ended the streak of 10 consecutive hikes. So of course it's quite crazy though. You basically pause in June and expect to hike in July. So what's your point here yourself? People have been asking this, but of course Jerome Powell says that they just want to take more view, but they are definitely more hawkish. All right, and of course now many correspondents feel that the Federal Reserve is going to send the economy into recession if they really continue to rate high. And of course it's very clear everyone wants a bull market. It's understandable, but let us be honest here. If they really want to bring inflation down, you really do need to do more than that. So initially, when that news came out, the stock market plunged, okay? But after that, the market rebounded because Jerome Powell didn't give exact note on whether there will be a definitely 2 rate hike. He just said that there will likely be, but not 100%. So the market bought into that and recovered. Gosh, okay. So we all know that the hike is going to come in. Just that now Wall Street is betting that Jerome Powell is lying. Okay, that's the crazy part. So they're going to meet out on the 25th and 6th of July, and the S&P is up by 13%. Most important is that 25% from the bear low last year. So that's why the market believes that it's a bull market. And of course, the producer price index, the PPI, fell by 0.3%, a larger decrease than expected. So it seems that everybody knows that the CPI, the PPI, all these numbers will be down. That's why everyone was buying since start of the month. But again, the question is this, is it that simple? And why would Federal Reserve expect the rate high in July? Oh, unless all this number was actually orchestrated to bring it down so that the stock market can buy it up. Is this going to be the last leg before the market had to come off? Well, in my opinion, it is. All right. So let me tell you why more in a short while. But clearly now, the consumer price index now is coming down at 4%, but still very far away at 2% that the Federal Reserve really needs. So if you're telling me now from 9.1% all the way to 4%, you need a 10 consecutive rate hike, then a sudden pause to itself, I can't see how it can come down unless the energy market really slams. All right, so the fear and greed index has hit 81. Oh my goodness, this is incredible. Hitting 81 doesn't make sense at all to me. And of course, you can see right now, we are just margin away from the last high. Let me bring it, is 82, February the 1st. Okay, so let's just take a look at the February itself. How was the market? If you remember, in February, that was the turning point of the market. Okay, let me just bring it to you now. If you can remember this. Okay, February, guys, this is February the 2nd. So February the 1st, that was what happened. Second, the market gap up all the way. S&P basically hits about 41.95, and then from there it went all the way down. So how much we end up? Let's bring to you now. Price and range from the highest point, it came down all the way to here. Okay, down by about 9%. Okay, 9%. Down by 387 points. So is it possible to see something happening like this? Well, it's all possible. Why not, right? So if the market do down by 9%, that will give us how much? Let's take a look. 9% from there, voila, that will hit the 200-day moving average. Is it possible? Well, now it makes some sense to me. What do you think, guys? Let me know in the comment box, and I would like to hear from you. Okay, so if the market do pull back from here itself, we're going to see this number, and this number is basically about 4,060 level. All right, so let's see whether this is going to repeat on its own. Yep. Okay. All right, moving on. Now, United Health Group, right, sells because of dividend. Apparently, right, this is a very big company. It's 400,000 employees, the market cap of $428 billion. And this is a very big one because you can see right now they have announced a $1.88 for dividend. That's a lot of money. So that's why the share price closed lower. But the thing is this is a very strong support level, which you can see over here. Every time when the market pulls back, this is where the support is. So of course, if this counter is to recover back up again, this will push the Dow Jones even higher, right? So that is possible. But on the flip side, if this is one of the thing to prepare, because you can see the market is staying below the 200-day moving average. All right, now most of the time it stays above the 200-day moving average, but since 2023 onwards, it's been staying below. So if you'd ask me, it is possible for it coming down to 404 level. So what do you think? Let me know in the comment box, okay? So this is my personal view and why I believe the market may pull back. So this counter itself has a 8.92% weightage on the entire Dow Jones. In fact, Goldman Sachs stakes was 6.56, Microsoft 6.54, Home Depot 5.81, and so forth. So you can see that it's a very big difference there. So that's why I feel that you must be very careful. Sometimes things happen for a reason. Now let's talk about this FOMC meeting. So they basically says 2 more rate hike and could bring it to as high as 5.6%. Remember, at the start of the year, I've been saying this, no, we're going to see 6%. Remember, that was what I've been advocating. And of course, a lot of people think that I'm speaking nonsense, but now you can see it come from the FOMC itself, okay? So the dot plot shows very clear, they're looking at least 5.5. Most of the members are actually looking at least 5.5. That means that there should be 2 more rate hike, okay? So many members are looking at least 2 more rate hike. The 2 of them are looking at about 3/4 point, and one is a full, which will give you at the high of 6%. Now, it's only next year, thereby the numbers, majority is looking at the rate cut down to as much as 4.5. So about 1% drop. Okay, so my view is pretty simple. If that is the case itself, right, we should have a little bit more room for further upside for the interest rate. And that is something that you must accept that, okay? So the thing is right now, Jerome Powell says that the next gathering itself is a live meeting, signaling that there's a 1/4 point hike isn't baked in yet. So they'll discuss, they'll talk about it, but as expected, they will likely hike the rate. It won't change, right? So Jeffrey Gunlock, basically on Double Line, says that the Federal Reserve will break something if it sticks to its rate hiking path. Now, of course, we all know that a lot of people now really doesn't want this to continue. So to him himself, Jeffrey Gunlock, he says that this dot plot is really very scary. It's definitely not good for the market. Now, he basically managed $92 billion. He says that now the economic figure indicators are all flashing red. There's so many indicators that are deeply in recessionary territory. So I'm hard-pressed to find an indicator that is strong right now, which I totally agree. So the question is this, how can they keep on raising interest rate? Well, because they have to basically make pain in the market. Because as you can see right now, the market is just buying and buying and buying non-stop into AI. So it's just a matter of time what happened in 1999 when everyone doing .com. And the thing is this right now, China sees a very incredible exodus of people moving away from China, and they're rich and powerful. In fact, right, 10,800 high net worth individuals have migrated out of China, and there are more to go, all right? So you can see that basically 10,800 left, and now 13,500 is good to follow, right? This is really incredible. And of course, the China youth unemployment hits a fresh record high. And think about this, because the rich are getting out of the country, they're not spending, investing in the country. So of course, the youth will suffer. And this, if the youth suffer itself, you can imagine what will happen to the entire GDP. But before you get into, let's short the stock market, you can see now, whoop, different. So that's how the market plays, okay? While all the negative numbers are coming in, the stock market recovered and rebounded from 61.8%, it went back to the 50%. So as long as the market tries to, hold it up, you can't really short the market. But the same thing again, once the Shanghai A50, the China A50 hits the 13,000 mark, I believe that it will pull back down again. So that's the reason why I'm kind of bearish with the entire China market. And of course, that including Hong Kong. All right, now Bitcoin is the one that I worry right now because Bitcoin is coming down. Now, just 2 weeks ago, Bitcoin was trading about 28,000, and I was giving my view on this. I said that Bitcoin will go down further, and my first target was 25,000, and voila, we have reached 25,000, and we are marginally away from 24,000 because that is where the MA 200 is. And of course, this has been a very strong support for the recent bull market, for the crypto market. But if it goes down, it breaks, my goodness, this can send it down to 20,000. And of course, one of the reasons is because of Binance and of course the guy involved in it. So all these things tells me that if Bitcoin can't hold 25,000, we will see 20,000 in the near term. So traders, be very careful. So what is the news in the market right now is this too, okay? So apparently crypto platform halt, okay? An echo of the sector 2022 rules, right? So this Delio and How to Invest. So apparently these two companies now is doing a temporary suspension because of withdrawals and deposit and stuff like that. So again and again, this is not a good sign. And of course, if the Bitcoin is a fall, some of technology companies will likely get hit. And of course, again, that will send a lot of wave down to the market. Now, one thing is that the 10-year yield is very interesting. It's pushing past 4%, in my opinion. So the last time we saw this was in 2022 in October, where it was a 4.33%. Then the next wave was around 4%, and now it's going to aim for it. Now, on 3 period, the market shows that it's following accordingly. But with the support recently at the MA 200, I got this feeling with whatever just happened in the FOMC meeting, this could bring it past the 4% mark. And when that happened, if you remember, that was where the stock market pulls back. So my view is simple, right? If you remember this is where in February, you saw earlier, that's where the stock markets had to come off, right? And because the yield was pushing up. So if this yield continue to push higher, I believe that the stock market will also face some resistance, yeah? So again, all these are charts and figures for you to think about it. But more importantly now is that the division between the bull and the bear in Bank of America. So apparently Bank of America analyst says that the bear market is dead right now. They sounded bullish and they declare that the bear market is officially over and telling clients to be part of this bull market, okay? But Michael Hanna in a separate research note says that they still think that the biggest pain trade in the next 12 months when the Fed funds 6%, not 3%, and below 3% require more than 4% of unemployment, which is definitely going to happen. Convinced that the EPS is up right now, rates down, unsustainable. Summer reap higher in risk assets will tighten financial condition. And the maths basically tells you that, blah, blah, blah. So in short, there should be more unemployment coming in, which I told you guys yesterday, yes, likelihood. And of course, when that all happened as well, right, when the Fed fund hits 6%, it will definitely hit the market hard. And it's exactly what I said. Now, not because I'm copying him, but we all know hard and figures. And then again, you may ask, then why the market's not going down? Well, like I say again, you just have to wait for a while. Everything happened for a reason. Now, I'll show this is going to be very big, guys. This is the TWB BNB signal called a big movement bar, and you can see very interesting. Now, it doesn't really happen at all the peaks, but always nearby. When you see the BNB, that is basically showing near the turning point. Gosh, that's where the market sell. And last night we have a BNB structure. All right, so traders, be very careful because based on every time when there's a BNB, the market will down quite a fair bit. Now, if it stays above the MA 200, it will likely come back down, as you can see right here. So if this is going to pull back, then you'll come back to this point, which is the same level, which I just say about S&P coming down to 4088 level. So everything seemingly is coming in together. So what do you think, guys? Just kind of go slow, all right? That's my view here itself. More important for my S&P chart now, it's still okay. The boys are still buying. The KRW is good. The KCX is good. So at the moment now, if you're going to short based on BNB, just know how to take a trade. But if you ask me now, is the market crash down? Nope. Everything's still okay. Now, first trip downwards will be this level. That will be the MA 30 because that is where the bulls are going to be fighting here heavily. Usually when hit MA 30, the market will rebound, yeah? If the market really breaks down below MA 30, oh gosh, this will really bring the S&P down to the 4088 level, which is at 4064 in this case right now. So this is where the fighting point will be at 4258 level. All right, of course, this number will change every day, but just take note of that. Now, why am I so worried about S&P? Because now you must understand the current PE ratio now is at 25.31. That's a pretty high level compared to the mean of 16.01. So if you're buying really at a high level right now, and you can see that usually that is where market will take a bow sooner or later. So in my opinion, guys, don't chase the market, go slow with it. And I just mentioned to you, likelihood we'll see a peak between 13 to 15. So let's see if I'm right. All right, guys. So I wish you all the best in trading. Take care. Have a great day. This is Cal signing off. Take care. Bye-bye.